In a surprising turn of events, the crypto industry is pushing back against Senator Elizabeth Warren's claims that recent approvals, like those for Coinbase and Ripple's bank charter, are illegal. This battle isn't just happening in the halls of Congress. It directly impacts you, the retail investor, as the stakes get higher. It's crucial to grasp how these regulatory narratives could reshape your investment landscape, with industry leaders rallying to defend their positions. The implications of this fight could redefine your access to digital assets. Stick around to find out how this clash could affect your portfolio and what it means for the future of crypto in the US. Trust me, you won't want to miss this unfolding story. Recently, Senator Elizabeth Warren has made headlines with her claims that Coinbase's and Ripple's moves toward bank charter approvals are illegal. This assertion has sparked a significant backlash from key players in the crypto space. Coinbase, a leading platform in the US, is standing firm, asserting that their operations are compliant with existing regulations. This battle is not just a legal skirmish. It could have real consequences for your investments. Just last week, Bitcoin experienced a notable price drop, falling by 8% to around $25,000. This downturn has many retail traders on edge, especially with the added uncertainty surrounding regulatory scrutiny. Conversely, Ethereum managed to hold steady, with a slight increase of 2% at roughly $1,600, showcasing its resilience amidst the turmoil. Meanwhile, BlackRock's recent push for a Bitcoin ETF has raised the stakes even higher. If approved, this could lead to billions of dollars flooding into the market, fundamentally shifting the dynamics of crypto investment. For U.S. investors, the outcome of these regulatory challenges could mean the difference between a thriving market and one that's stifled by excessive oversight. As the Federal Reserve continues to monitor inflation and interest rates, the crypto market's response to these broader economic factors is crucial. The intersection of these regulatory debates and macroeconomic policies could create volatility, impacting your investment strategies. Ultimately, staying informed about these developments will empower you to navigate this complex landscape more effectively. With Coinbase defending its position and the stakes rising, it's essential to keep an eye on how these events unfold. This week, as the crypto industry rallies against Senator Warren's claims regarding Coinbase and Ripple's bank charter approvals, retail investors are feeling the ripple effects of this regulatory tug-of-war. Picture this: a retail investor who's just bought $1,000 worth of Ethereum on Coinbase. In the wake of these regulatory debates, let's say Ethereum's price sees a drop of 10% over the week. That investor now holds $900 worth of Ethereum, feeling the weight of uncertainty about the future of their investment. Now, let's compare this scenario if that investor had chosen Kraken instead of Coinbase. Kraken offers a similar trading experience, but during this period of volatility, they have lower trading fees, around 0.16% from market makers compared to Coinbase's 0.50%. This difference may not seem substantial, but it translates to an extra $3.40 in fees on that $1,000 trade if using Coinbase, leaving the investor with less capital to leverage during price fluctuations. But here's what nobody is saying: if that same investor had timed the market right, and Ethereum surged by 10% instead, their investment would have grown to $1,100. However, factoring in the trading fees, the investor on Coinbase would be starting from a lower base, ultimately missing out on critical gains. These regulatory challenges highlight the importance of selecting the right platform. While Coinbase is a familiar choice, Kraken's fee structure might save investors more in the long run, especially during volatile periods when every dollar counts. As the industry continues to react to Warren's assertions, retail investors need to remain vigilant. By understanding the implications of these regulatory shifts, they can make informed decisions that better protect their investments. In addition, remember that gains or losses realized from trades will still be subject to IRS regulations. So, whether you're on Coinbase or Kraken, it's essential to keep track of your capital gains for tax purposes, especially during this tumultuous time. As the situation evolves, investors should also keep an eye on decentralized finance platforms, which may offer alternatives to the traditional exchange systems under scrutiny. Overall, staying informed is critical to navigating this complex landscape. As the crypto industry pushes back against Senator Warren's claims, there are concrete steps you can take this week to stay ahead. First, consider reviewing your investment strategy. with ongoing discussions around ETF approvals, particularly for Bitcoin. Keeping those positions flexible might open up opportunities if the market shifts. Set a budget maybe around $500 to explore ETF options through platforms like Fidelity or Schwab. Next, monitor your trading screens closely. Platforms like Coinbase and Kraken are likely to face increased volatility amid regulatory scrutiny. Set up alerts for significant price changes and be prepared to adjust your positions quickly, especially if you see a dip of 10% or more. Third, take a proactive approach to your taxes. With discussions about potential new regulations, it's wise to gather all your transaction records. Use tools like CoinTracker or TurboTax to ensure you're ready for tax season, especially if you've made substantial trades this year. Finally, consider enhancing your security by transferring assets to a hardware wallet. If you have over $1,000 in crypto on exchanges, taking that step can significantly reduce risks associated with hacks or regulatory shutdowns. By following these steps, you can navigate the current landscape more effectively while keeping your investments secure and compliant. As the crypto industry pushes back against Senator Warren's claims, investors should brace for a thrilling 90 days ahead. With challenges to Ripple's bank charter and Coinbase's regulatory status at the forefront, the outcome could reshape the landscape for retail investors. This fight isn't just about compliance. It's about the future of how we engage with these digital assets. Will we see a surge in prices as optimism grows, or could uncertainty lead us to a downturn? Subscribe to the channel for daily crypto updates and tell us how you think these developments will impact your investment.